Hey traders, welcome back to another Sunday video where we take a look at markets for the week ahead. In this video, I'll be going over things like indices, commodities, currencies, and charts that I'm watching. I may even get into some sectors today as I discuss sort of some of the ideas that I'm currently watching in the markets. So starting out, we'll take a quick look at where the S&P 500 ended out last week. And if we zoom in on price action just a bit, I just need to clarify that this is right here, the all-time closing high that was for the S&P 500. And then we got this big breakout to the upside. Of course, the Federal Reserve planning to cut rates and continue to do so going forward has the stock market pretty excited because remember, lower borrowing costs are generally perceived as good for businesses and for consumers who will then go out and spend more money, which again is good for businesses again. So we do see the S&P 500 charging higher and actually breaking through the highs. A little bit of a give back on Friday, but still the story remains intact. This is a very bullish market in my personal view, and I am looking to be a participant if I can. Now, I've been long the S&P 500 and NASDAQ and Russell in and out for the good half of this entire year. That being said, I've missed a bit of this recent rally. And as I go over this topic, I just want to mention that if you're somebody feeling FOMO in the markets recently, you are certainly not alone because a lot of things are moving very violently. If you're a crypto person, you've seen Bitcoin making a big push. If you're a gold trader, you know gold has made just a one-shot move to the upside. And of course, going back to the stock market, it's been a, smoke show for the, for the bulls. It's been a big winner. So, when we look at charts like these that are all making big moves, if you're in the move, it's great. If you're out of the move, you're feeling a little FOMO. And that's how I'm feeling personally about the indices. I've been right in the direction this year, but some of my timing has been off. And so what I'm looking for is a chance to get involved in the indices if I get a proper setup in the coming weeks. Now, again, we have elections coming up. We have uncertainties about the economy. There are geopolitical tensions all over the world with, Ukraine and Russia and of course, in the Middle East as well. You have all of these uncertainties. So I would not be surprised if we wake up one day and suddenly there is a shocker to the markets that could cause the markets to temporarily gift us some sort of drop. Now, I will say that gifting us a drop is a bullish stance because again, if you believe that these drops are going to turn into much more of a sell-off, then they're not quite a gift if you're trying to buy those dips. But in my personal view, the market does have more room to continue its upward march. And so for me, what I'm looking for is pullbacks on the S&P 500. I'm looking at the NASDAQ, same sort of story here. You can see a bit of a difference in price action. Big sell-off here and then still has not taken back those highs, but recently had a nice little push through this downward trend. So for the NASDAQ, what I'm looking for is similarly some pullbacks into perhaps some levels of support. I actually like this 19,600 level a lot. If I go ahead and draw a fib level in here, you can see it does also line up nicely with the 38.2% retracement zone. So I do like the indices on the long side. I think price action looks very bullish. However, what am I waiting for to actually get involved? Well, number one, a pullback, but number two, I also need to see the edge finder start to form some bullish bias on the indices. Now again, September seasonality really kept me from getting super long the indices, which of course I wish I was long the indices, but it was a cautionary tale because historically, seasonally, we see September be a bearish month for the indices. So I've been cautious on them. So maybe that will serve me well. Maybe we see the last few days of September and October, we see a bit more of a pullback, which would be great in my view for possible pullback entries, as long as I can find some confirmation on the edge finder. Now, there's some things that could change in the upcoming days, so let's just sort our filter here for a second on indices. Now, if you don't know what I'm looking at, by the way, this is the edge finder. The edge finder is a market scanning software that looks at economic data, technical data, and sentiment data to help produce better trading ideas in the markets. It's what I use every single day to find the trades that I personally take. Now, when I'm looking at things like the S&P and the NASDAQ and the Russell and the Dow, these are US indices. they're all kind of neutral right now. But what could swing us this week? Well, we have manufacturing PMI numbers coming out this week, which last time they disappointed. So if we get an upbeat manufacturing PMI, that could certainly swing the odds a bit here on the Edge Finder's calculation to a +1 score instead of a -1, giving us some points there. And then also we have to remember that seasonally we're changing into October, which is more of a neutral month. So we're going to take off some of these scores and go neutral. So I'm forecasting here that if we get some good economic data in the upcoming days and weeks, especially with that jobs data towards the end of the week, we could very well see some big swings on the US indices, in which case I'd be definitely interested in buying dips. So that's the breakdown on the indices. I'm looking for opportunities to buy dips, but I'm in no rush because, again, chasing right now would be probably a mistake in my personal view. I think the better risk to reward would be to wait for some larger drops on the indices before I can start trying at some entries on the long side again. So again, stay patient if you're watching the indices yourself. And if you think here's one thing I'll mention for the bears. If you're bearish on the indices, what we probably want to see is not only these levels come back into play, but you actually want to see them start to break. And again, right now, I'll warn you, in fact, I'll bring some data into this picture because I think when I make points with data, it's a lot more telling. Okay, so check this out with me for just a second. What you're looking at is the put-call ratio. And the warning I was going to make anecdotally and now with data here is that many traders, they start to see the indices go up and up and up, and every single day they're green, and they start thinking these things are indestructible. They only go up. And I can tell you from experience and from studying the markets before I was trading them, like studying historical markets, indices have a tendency to drift higher, but when they crash, they can be so ugly. And one thing that does make me a bit nervous is that sentiment in the markets is very bullish here, according to the put-call ratio, showing investors are very much hitting the buy call button, meaning they're buying calls on the markets aggressively, thinking the market will just keep going up and up and up. Now, when the put call ratio goes towards the lower end of the extreme, that always makes me a bit nervous because that's telling me, oh, investors are feeling very optimistic. They're not buying many puts. And the opposite is true when we see instances where puts get very in demand by the market, and it ends up actually being a really good signal to potentially go long. Sometimes, not always. Nothing is perfect. But the put call ratio is something I find myself increasingly looking at as an index trader myself. This is really, really important to watch. Also, by the way, the tool that I'm using, the Edge Finder, I mentioned it earlier, the top setups algorithm, as well as the put call ratio and many other economic data tools. If you'd like to get access, there is a link down below in the description and a promo code for subscribers that gets you a nice discount off the software. So if you'd like to purchase access, you can do so there down below in the description. All right, so put call ratio, but there's one other one, right? We got more sentiment than just that. We can look at put call, but we can also look at the investor sentiment survey, showing us that investors are still back to feeling very confident, very bullish, and look at bearish levels. Now, this is a survey put out. People respond to the survey, and they're responding basically saying feeling very little bearish. Very few relatively said they felt bearish, relative to bulls being very strong. Now, again, hear me out. I'm still bullish on the indices. I'd love to buy the dip, but I'm getting a little cautious up here that we may see a little bit of frothiness here. People might be a little overzealous, a little bit optimistic about the rate cut story, and people feeling invincible in the stock market can often lead to some big reset events. So I am looking for pullbacks, and that is the long story short on those things. Again, I'll keep a close eye on ideas coming from the sentiment survey, retail sentiment, put call ratio, and of course the commitment of traders data as well. So again, all of this is included in the Edge Finder if you'd like access. Link is in the description for that. Let's keep pushing on. So let's take a little look at gold here. While we are on the subject of things going straight up, gold is killing it here recently. Just an absolute banger of a year for gold. And I'm not in gold, but I recently trailed out of a silver long position, which, believe it or not, silver is actually performing better than gold this year. Silver's on a monster move. It may not look like it in recent months, but we've had some really good pushes to the upside here this year. And I do think that the path of least resistance for this is to continue. I do think we were a bit due for a bit of a pullback And I just took that as an opportunity once we broke through the support level to just take profits on the move. And if we get a bigger pullback, I may take a look at taking another stab at a long position on silver and or gold. Gold, what I'm looking for here would be a pullback on this ginormous move to the upside. If we draw some fibs into this, you've got the 61.8% retracement level, which very well could come into play. This is not something I'm betting on. I don't think gold is going down. I'm saying if it goes down, I'd be interested in maybe getting some long positions built on this gold pullback. Now, I mentioned something earlier that I want to discuss about when you're seeing a chart like this, gold going up, for example, just every single day it feels like, or if you're taking a look at the NASDAQ and S&P 500, these things have just been monstrous moves for the last few years even. Well, I wanted to just show you something on a relative basis. I'm going to pull up QQQ. This is just a good reminder. If we go back and let's just set ourselves back in 2000, let's just go 2000 and let's just show you this. I'm not sure why it's not working. Anyways, hold on. Let me try it again. Go to 2000. Go to there. Can we go back that far? Let's see. Well, maybe not. I think my trading view is having a tough morning. There we go. Okay, so check this out. This is what you have to remember as an index trader. If you're feeling like, look at this thing just goes up every day, and you made that decision. Let's say that we're in this situation right now, right? The point I'm trying to get at is when markets are no longer in bull mode, they can go down, and they can actually go down way further than you think. I mean, look at this. If you had bought over here, you're down currently 50%, and don't hold your breath, because look what happened next. It just kept going and going and going. And my point was showing you that is that was a multiple year drop in the NASDAQ, which of course was pumped up on, the internet bubble and that sort of thing. But the point is, indices can get overbought. And I'm not necessarily saying that I think that the index right now is currently overbought, but I certainly don't want to hurt my chances of making good money by buying at the very tippity top, right? I'm going to look for pullbacks. I'm going to be cautious, and I'm going to use stop losses in case the market does decide to drop off the face of the earth. I just wanted to make that point because, again, it is easy to start believing indices never go down and forget that there are multiple year periods where you see massive drops and resets in stock markets around the world. And this is just the US market. If you're talking about other stock markets, oh my gosh, it's way worse, right? Stock market in the US is like the best one of the last 100 years. So if you take a look at like the UK stock market or the Japanese stock market, it is certainly not a pretty picture at points in time. So anyways, let's keep pushing on. Let's take a look at the dollar index. Dollar index down towards its lows here around 100.4. And this one's big, right? Because if we do see a break through those lows, if we continue this downward trend, it's very possible that we continue to see the Fed cutting rates, and whether that is good or bad for the or in response to a good or bad economy is irregardless for what the dollar would do, right? So if you get a weakening U.S. economy, yes, the dollar is going to come down hard, and if you get a modest U.S. economy but inflation cooling, the dollar can still come down. So to me, the path of least resistance for the dollar does still seem to the downside. Though I will also say about the dollar, it does seem like we've been a bit oversold for some time. We're consolidating here. And if you get any good jobs data this week, like let's say NFP comes in hotter than expected, we very well could see a bit of a resurgence in the US dollar and see a bit of a bounce back in the short run. But I do think in the longer term basis, the dollar continues to go down, especially if we see sort of a global reacceleration of the economy. Perhaps the US dollar may not look as attractive. We'll see. Anyways, let's keep pushing on. So let's take a quick look at some of the currencies involved with the dollar here for a moment. We can pull up the euro dollar trending to the upside. And I do believe that on the top setups page, we've actually got on the FX side of things, let's go major currency pairs. Yeah, we get some interesting signals here coming from the Edge Finder on the major currency pairs. If we take a look at euro dollar, not quite getting a bullish bias, but if we take a look at pound dollar, this one's looking really interesting. I actually really like this very simple pullback play. If we get something like this week, I could very well be seeing myself get long the pound. So I like that pullback to the 38.2 to 50% retracement. Somewhere in this area could be an interesting spot in my view to look for longs and just continue the upward trend that we've seen take place this year. So I do like that with a stop loss probably below the 61.8% retracement. And if I do take that trade, it will be shared inside of our Discord room. All of our trades get shared inside here. If you're not already inside of the Discord, there is a link and promo code down below in the description to sign up for the Discord. You get access to every trade that I'm taking, live accounts, all that good stuff. You can see the full breakdowns, analysis, etc. I trade commodities, FX, indices, stocks, options. We trade a little bit of everything in the group, and we're very, very active. So come join us if you haven't already. It is worth the money. I could say this just as a quick sales pitch. We trade live brokerages. We don't do any demo balling, no nonsense like that. If you're very serious about your trading and you're looking to improve and you'd like to trade alongside myself and my team, I highly recommend you take that offer, use the promo code in the description, come join us for a good price, and come get in on the action. I'm telling you, it is definitely worth the money. Please do your research. It's not a get-rich-quick scheme. We're not here telling you you're going to make a bunch of money quickly. But if you're serious about this stuff and you want to learn, our Discord group is the place to be. Okay, so dollar yen had a big sell-off here. They announced a change in, I believe someone in their central bank key position was changed, or some announcement there. Let me actually see. We can probably pull it up here if we click this button here, maybe. I can't see it here, but there was a change in leadership. Basically, he was perceived as a bit more of a hawk or a hawkish central banker, which means basically more willingness to keep the yen strong and maybe not cut rates or keep rates where they're at, but rather willing to hike rates for the Bank of Japan, which could strengthen the yen, which continues the story that we've seen the last few months of strong Japanese yen currency pairs or down moves on currency pairs here. I actually think that if you see a break through these lows, we very well just may continue this downward trend. We've been in a bit of a consolidation zone here with the dollar kind of going sideways. But if we take out 141.6, that just on a technical basis looks very bearish for the dollar yen and could continue its downward trend that we've seen over the last few months. So we'll have to keep an eye on that one and continue for that. Take a quick look at NZD-USD. This is another bullish reading. I really like this chart as well. If we actually just remove this old fib and apply a new one to this swing low to swing high, same concept as the pound US dollar, possible pullback plays here, a bearish dollar setup, bullish NZD and GBP setups. I like that for the upcoming week. We'll see if we can get some setups there. And then finally, I want to talk a little bit about Bitcoin here. So Bitcoin at the top of this range here, and I do think that Bitcoin wants to make a bigger push higher. I think that it's trying to. And, obviously we can see it moving up in price, but what I mean by trying to is if you see the stock market continue to float higher and good times are kind of back on, right? We see more of a risk on environment. Bitcoin very well could have another big surge, another big run like we've seen in the past. So a signal that I'm looking for would be any kind of break of this concept, pull back into this, and perhaps strong jobs data points this week would actually make me a bit willing to maybe get long Bitcoin. How does US jobs impact Bitcoin? Well, it's all about confidence on the consumer side. It's all about confidence in the economy side, etc. So if we get good jobs data, it could be a bolster to the story here. And I'd actually be interested in buying Bitcoin on any dips for the longer term. I like those setups going forward. And as long as we also get confirmation from the Edge Finder, I may take that as a short-term trade. The Edge Finder does track, of course, crypto. It tracks a little bit of everything. So just a reminder, you can get access to that in the description down below. Last thing I will say is that if you're looking to trade with a better brokerage or trade directly on TradingView, several of the brokers listed in the description down below will allow you to trade directly on TradingView.com, execute positions, manage trades, etc. It is super convenient. It's what I personally do. And if you'd like to use one of those links down below in the description, you'll be supporting my channel. And also, each one of them has special sign-up perks for subscribers of my YouTube channel. So you can find out more information by clicking those links in the description down below. Thank you very much for watching. Have a great week ahead.